Listen to the Tommy Schnurmacher Show, live weekdays 9 to noon on CJAD 800 and CJAD.com.
Well, officially into the new year. We've got a year of issues to tackle, changes to keep up with. Unless you have a crystal ball, not easy to figure out what forces are going to be shaping this new year. But I might just have the next best thing with me, Gerald Celente, publisher of the Trends Journal, a publication that looks at trends that will be shaping the future. And he joins me now. Good morning.
Hey, Tommy. Good morning. Happy New Year.
Happy New Year to you, too, as well, Gerald. So, Gerald, tell me, what are some of the big trends to look for in 2015?
Well, before we look ahead, I want to look back a little bit because we've been doing this for a lot of years. And one we missed last year was a big one. And that was we believed that the markets would have unraveled. And we believe that because we thought that they were, and it ties into the future trends, that the Federal Reserve was going to have to raise interest rates because they have not raised interest rates in the States since 2006. So in the old days, people used to put money in the bank. They had a thing called savings accounts.
Right.
And you would get more than it would beat the interest, the inflation rate. And now, of course, you put money in the bank and you get nothing back. So what they're doing is they're propping up the markets with these low interest rates. So you saw what happened in the beginning of December when the markets started to unravel, and then the Fed came out and said, be patient, we're not going to raise interest rates. They went back up. So that brings us to fast forward. So we missed it. We thought that when they raised interest rates, you're going to see the global economy slow down to very severe levels. So they're keeping interest rates low, not only here but around the world. But this year we're going to start seeing that change start to have negative effects. And you're seeing it right now in Europe. And you're seeing it with the currency, the euro, because they're going to announce that they're going to have their version of quantitative easing. So that means it's going to cost the Europeans a lot more to live. The euro's down to about now $1.19 against the dollar, and it ties into other trends that we're seeing because it's a global slowdown. And one of the top trends for 2015 are price wars. What's going on with oil prices? At first people kept saying, this is to punish Russia. It's not punishing Russia. It's hurting everybody in the oil business. And look what's going on with the loonie. How much has it lost since oil prices started going down since June? Now it's about, 84 to $1. So this is oversupply. There's more oil, but not only oil than demand. There's more copper. There's more iron ore. A ton of reinforcement rod in China is cheaper than a ton of cabbage. Copper prices are down. China gobbles up 40% of the world's copper demand, and that economy is slowing down. So it's going to hit nations around the world, like Chile, big copper exporters, and all natural resource exporters. So what we're looking at is the second trend called bankism. People should stop calling what we have now capitalism because the banks are running the show. I just went through some, and it's not only in the United States or Europe. Look what's going on over in Japan with Abenomics. They just have a different word for quantitative easing. And
now,
what are they?
I want to ask you about this quantitative easing. What it means, basically, what the United States did, and now Europe, you're saying, is doing the same thing, is they're just printing counterfeit money. It's not really counterfeit. They're allowed to do it. It's legal. They just say it's a computer entry. They're saying there's more money. They hand it out to everybody, and everybody keeps spending it. And that's why the price of collectibles is going up to $50 million for an Andy Warhol painting. There's just so much money sloshing around in the system.
You're 100% right, except for one thing. They're not handing it out to everybody. It's going to the banks. And here's the deal. You're a big bank. I got something for you, Tommy. You could borrow money from me for 0.25% and then charge customers anything you want for it. And matter of fact, you could buy back my treasuries and you'll even make money on that. And then why are the collectibles going up? Because when you look at the equity markets, again, with the cheap dough, who's doing the deals? Companies are borrowing money for virtually nothing and buying back their stock, so they're enriching their portfolios. And mergers and acquisition activity in 2014 was back to 2007 levels. So you're 100% correct, except that it's only going to, it's not even the 1%, by the way, it's 0.01%. Here's a number that should have everybody saying, you better head for the hills because things are going to get ugly. 85 people have more money than $3.25 billion.
85 individuals.
85 individuals around the world have more money than $3.25 billion. And again, it all ties together. Why are oil prices down? Why are copper prices down? Look what happened during the Christmas retail season. 70% off before Christmas Day. In the old days, it was 50% off after Christmas, and only junk was left. There's not enough people with enough money to buy all of the product out there. A Pew Research Center study just last week came out in the United States. The gap between the rich and the poor right now is even at levels worse than during the Gilded Age.
Now, you're saying you're talking about people buying stuff at Christmas and the discounts, but isn't part of the reason that so many things are still selling is because you don't really have to pay for anything? It's no money down, no money per month until years and years later.
That's a big part of it, and that's what's also happening with the auto industry. That's why auto sales are going up. They're doing the same thing with non-verification loans that the housing market boom transpired with. You don't have any dough, don't have a job, got a lousy credit rating? Come on over, you could buy a car. I got one for you. And don't worry about the interest. We'll put it at zero for a couple of months. So it's the same scam over and over again. And when we're talking about Japan, they are doing the equivalent of the United States putting in, when you compare their GDP to ours, $3 trillion a year of phony dough, and it's not working. The third quarter GDP in Japan was down 7.2%, and that's after the first round of Abenomics, so now they're doubling up on it. And they're also, not only that, the pension funds are now they're investing in global stock markets when they only used to buy bonds over in Japan. So the whole thing is one big Ponzi scheme, which brings us to the next one, and that's the grand manipulation. And by the way, that piece in the Trends Journal is being written by Dr. Paul Grobitz, who's former Assistant Treasury Secretary under Ronald Reagan. And here's the deal. They rigged the LIBOR rates. Those are the interest rates. We know that. It's a fact. It's not speculation. They rigged the Forex markets, $3.5 trillion a day worth of currency trades. They rigged them. We know it. It's not made up. You just don't see any head roll because that's the way it is with bankism. The banks get a free ride. So the markets are being totally rigged.
Now, why do the banks get this free ride? Is because they contribute very highly to both your major parties in your country?
No, because they're running the show. Who was the guy that deregulated the Glass-Steagall Act that was put in place during 1930s so the banks could not become the casinos, the gamble that they become? It was Robert Rubin. And what was he? He was the former head of Goldman Sachs. And who's the guy that gave us too big to fail? Why, that was Henry Paulson under Bush. And where was he from? Goldman Sachs. Oh, by the way, who's the head of the ECB, the president of the ECB, Mario Draghi? Wasn't he the managing director of the European division of Goldman Sachs? Oh, and how about your guy that used to be in Canada that's now over there in the UK, Mark Carney? Hey, he was with Goldman Sachs, too. It's bankism. They're running the show. It's not a revolving door. And look at it's the banks are in control of the entire world government.
All right, we're going to continue our discussion. More of your questions for Gerald Celente. Text your question or your comment to 514-800. Gerald Celente, publisher of the Trends Journal, on the line with us right now. If you have any questions for him, text them to 514-800. Joe wants to know, do you believe metal prices are being manipulated? Do you foresee China and Russia buying gold and creating a short squeeze?
Dr. Paul Craig Roberts, his website is paulcraigroberts.org. He believes that gold prices are being manipulated. There's more demand for gold now, physical demand, than ever. But the paper markets, the COMEX, and the trading, it's very easy to short the markets with naked shorts and drive down the prices. As we're speaking now, gold is hitting back above around the 1,200 mark. China and Russia are buying gold, and they're going to continue to buy it. And I really and I don't give financial advice, but I've been buying gold since 1978, and I believe in gold because of all of this cheap money printing, and I believe at some point it's going to show itself in a devaluation of currencies. So you're not going to see inflation in the standard way where there's more demand than supply. It's going to be that it's going to cost you more to buy things because your currency is going to devalue. And yes, I believe that China and Russia will continue to be big purchasers of gold, and also they're easing restrictions again in India so that people could buy gold there again because they were trying to protect the rupee from devaluing so much because people were buying so much gold.
This texter wants to know, where can I find sources proving that 85 people have more money than $3 billion?
Google it up. It's right there.
Okay. This texter is saying, what can the little guy do to protect his nest egg?
Well, again, I don't give financial advice, but for me, I only speaking for myself. Most of my my assets are in gold, and of course, I buy historic real estate, but that's different. So there's not a lot you can do. It's very iffy out there because, again, in the old days, you could put money in the bank in a savings account and get interest back on it, but you can't anymore.
What do you think the impact will be of oil prices, and are they going to continue to drop in 2015?
I believe they're going to continue to drop, and for other reasons as well. One of the trends we're writing about is dominant energy. They're no longer alternatives, and it's going to go beyond wind, solar, geothermal, and biofuel. Ben Davis is our science editor, one of the top people in the country. And you're looking now at a reinstitution of atomic energy, nuclear power plants, but they're not using volatile substances like uranium. They're going to thorium. And you're seeing a lot of breakthroughs with hydrogen. There are a number of breakthroughs, and ironically, it's happening at a time when oil prices are declining. So it's going to put more downward pressure on them. I mean, after all, at one time they used to be ice boxes, and now they're, that refrigerators were the alternative. And from Julius Caesar to Grover Cleveland, the world's leaders went to their inaugurations and coronations in horse and buggies. And now, of course, then the automobile was the alternative. And so that's what we're going to start seeing with fossil fuels. They're going to go the way of the horse and buggy and ice in many ways, not completely. So yes, I believe oil prices are going to continue to get under pressure as the global economy continues to slow down.
What about Russia? Will Putin be a major influencer in 2015?
We've been following the Ukrainian crisis. We called the civil war before it began, and we saw what was going on with the anti-Russian sentiments with the Sochi Olympics. And we're political atheists. We don't take a stand. We just call things the way we see them. Whether you like it, don't like it, we don't care. We look at the issues. And when you look at the Ukrainian crisis, this was an American-pushed agenda. The person that wrote in and wanted to know about the 85 people that own more than $3.25 billion, you could also Google up YouTube, Victoria Nuland, Nuland, Assistant Secretary of State, December 13th, 2013, at the Washington Press Club. And there she is, with a Chevron sign over one shoulder and an Exxon Mobil sign over the other shoulder, saying she just come back from Kiev, saying that Ukraine is European and the best path that they could take is the one set forth by the IMF. And then, of course, they could Google up her conversation with the United States Ambassador Jeffrey Pyatt, and where they tapped into their phone conversation and how they're talking about the overthrow of the Yanukovych government and, to put in quote, Yatsenyuk. So going back to Putin, anybody that thinks that they're going to pressure Russia has virtually no understanding of history. I have a chart in front of me that a fan gave me of Napoleon's march to Russia at the Polish border. He started with 422,000 troops. By the time he got back to Poland, he had 10,000 troops. Hitler launched the largest military offensive against Russia in the world, and we saw what happened. So to me, and looking at the facts, it's the United States and NATO that are poking the bear, and the example is that when Gorbachev and Reagan made the deal and the Soviet Union began to unravel, the deal was this. NATO was not going to expand beyond where they already were, and in return, Russia was going to turn over East Germany back to Germany. And beginning with Bill Clinton, they started reneging on that deal, and this is more of the neocons' push toward globalization as I see it. So they're provoking Putin, and I think Russia's the wrong country to provoke.
We're going to continue our discussion, our conversation with Gerald Celente. Text your question to 514-800. This texter wants to know, Mr. Celente believes the U.S. dollar will crash, and will we see another crash like 1929? We'll ask those questions after this. The publisher of the Trends Journal, Gerald Celente, on the phone with us. This texter wants to know, who's pulling the strings in this gentleman's conspiracy-addled mind? He's pro-Putin to boot. Isn't it true that the people of Ukraine preferred Europe to Russia?
I'm not pro anybody. And, oh, by the way, to answer the other question, 85 richest now have as much money as poor as $3.5 billion. USA Today, November 7th, 2014. So it's not about pro anybody. It's about listening and learning the facts. And as I said, the facts are there for anybody to look at. And who's pulling the strings? It's part, as I see it, the military-industrial complex as well. It's what Eisenhower warned this country against, and that was a 5-star general, supreme commander of the Allied forces, and 2-term Republican president. So I would hardly call him a conspiracy theorist. And what's happened is that the business of America is now war. You look at the budget that Obama just passed, and it's estimated over 70 cents of every dollar is going toward the military and the cyber-industrial complex. And so to me, this is just more war. I mean, we're back in Iraq. We're bombing Syria. And look what's going on with Libya. That was a wonderful one. So no, it's not a conspiracy theory. It's right there in front of everybody's eyes.
This texter saying, am I right to believe that Putin is the most powerful person in the world? And if so, will he allow oil to remain this cheap?
It's not in his hands, and I don't think he's the most powerful person in the world. I don't think there is such a thing. It's a supply and demand issue, Tommy. You look what's going on in China. They expect each year, for example, that their GDP increase at least 7.5%. It's down to about 7% now, which is good by most standards, but it's not good enough for them because they have 1.2 billion people that they have to keep happy. And you look at, it's copper prices, it's iron ore, it's corn, it's one commodity after another. So no, Putin's not in control of this. They have nothing. You look what's going on, and look what's going on with how it's hurting. 20%, it's estimated, of junk bonds in the United States are energy related from the hydrofracking boom. So this is hurting people all over Venezuela, Angola. It's commodity prices beyond oil. So no, there's no one in control.
Gerald Celente, always a pleasure. Gerald Celente is the publisher of the Trends Journal.
News Talk Radio, CJAD 800, CJAD.com.